Hey, it's Tim. We're seeing developed markets around the world come back, along with some not great U.S. numbers, and even the Michigan confidence sentiment just came out. So you've got numbers, you've got macro, you've got the lack of any real impetus, despite the fact that people got real happy about the Goldman Sachs settlement yesterday and BP with a short-term victory in their oil spill. I think if you look at currencies, look at the dollar, that's probably way oversold here. That's going to put pressure on the way back if you believe we can turn the corner. Gold's down 13% in euro terms over the last bunch of sessions, and that's an indicator that, again, part of that risk trade, which was so high a couple of weeks ago, was taken off, and the question is, are guys ready to put it back on? You got options expiry today. Typically, we'd seen buying going into that, so maybe the action of earlier in the week was related to that, and therefore you remove that buying impetus, and we maybe get a bit of an options hangover on Monday or Tuesday. Something to watch, but emerging across the board, weaker. Russia down 71. You're seeing much of Central Europe under a little bit of pressure today. Asia traded actually fine despite terrible performance in the Nikkei, down 1.5%. A lot of fears that the stronger yen is choking off any export hopes that they have, but at the end of the day, Japan traded in its own little world. Brazil's down about 90 bips. Currency's off 75 bips, so it's some choppy sliding out there. And again, I think there's some difficult earnings to digest. U.S. banks, while their loan books look better, are not making any money, and that speaks to ultimately the health of the U.S. consumer, which is, until there's a new leader to ascend to the throne, the global growth story. That's it. Thanks.